Hello friends. So as you are aware, right now we are on chapter number 4, that is nothing but international trade. In international trade, how many units have we completed? 4. Which are they? First one is theories of international trade. Second one was instruments of trade policy. Third was trade negotiations. Fourth one was exchange rate and its economic effects. And finally we are on the 5th unit today. Name of 5th unit is, in international trade, it is called as international capital movement. Now in case of international capital movement, what we are going to understand? So the first topic that we need to understand, friends, it is going to be introduction and types of foreign capital. Now friends, what does this name suggest to you? When we say international, which means cross border, multiple countries will be involved here. In what? In capital movement, that is nothing but monetary transfers. Now it might excite you to know that when we are talking about capital, of course it is related to one thing, and that is nothing but business. So here we are talking about the cross border movement of business transaction monetary purposes. That is nothing but the monetary transfers which are done for solely business. However, in the initial part, when we talk about foreign capital, see, when we are talking about foreign capital, it is not only necessary that we are talking about business, it can be any particular transfer. So the first part, introduction and types of foreign capital, let us begin. Friends, can you tell me, whenever we are dealing with cross border currencies, what are the different types of monetary transfers that keep on happening? See, there cannot be only one type of transfer, isn't it? That is investment. There will be multiple types of transfers. For example, number 1, we can have foreign aid. Now, what do you mean by foreign aid? It is nothing but foreign help, foreign grant, foreign gift. If some country is giving any gift, any kind of unilateral receipt to us, similarly, if we are giving any amount to any other country of the world, which we are not expecting them to return to us, it will be called as foreign aid. Similarly, if let's suppose we are borrowing the money from some other country or some other institution, then it will be called as foreign borrowings. So first one is foreign aid, that is help. Next one is foreign borrowings, it is nothing but loans. Third one will be receipts from non-residential Indians. So whatever non-residential Indians, NRIs, are sending back to our country, that type of movement will also be considered under foreign capital. Lastly friends, fourth one, it is nothing but investment. Now when we are talking about investment, frankly speaking, there are two categories of investment that we are going to talk about. First one is called as FDI, which stands for foreign direct investment. The other one is called as FPI, which stands for foreign portfolio investments. So one thing that we have is FDI, the other one is nothing but FPI. Now friends, in the next part, we are going to understand in detail what do you mean by FDI and what do you mean by FPI. So let us begin with the next part. Okay, so next one is FDI and FPI. Now you are very well aware about the full form of FDI and FPI, friends. FDI stands for foreign direct investment. And FPI stands for foreign portfolio investment. Now, when would you call an investment as FDI and some investment as FPI? Get a very clear understanding here of FDI as well as FPI, friends. Now, whenever there is a cross-border transaction, it is called as foreign investment if it is coming into our country. But this foreign investment, how it will be classified as foreign direct investment? So, if a foreign company is investing in your company, a foreign company or an investor from foreign country is investing in your company and taking 10% or 10% or more in equity from you. They are becoming your business partner and they take 10% or more of your business, then such kind of investment will be called as FDI. But when will you call it as FPI? Whenever the investment is less than 10%. So let's suppose if an investor invests in your company valuation is 100 crore rupees. They offer you 30 crore rupees and they take 30% of your business. That means they become 30% partner in your business. Such kind of investment will be called as FDI. But it is not necessary that they will be investing only in some or the other company. They can have their own business as well. So for example, there is a firm which is operating in some other country of the world. Now they have decided they will come to India and run their own business. Still it will be called as FDI when they are opening their branches here. So they invest in some company, that is also FDI if they take more than 10%, or they start their own company here, that is also an FDI. So that is the meaning of FDI. Now what do you mean by FPI? The investor has invested in your company, but it is less than 10%. That means it's a very minor stake in your entire organization. Generally, FPI investments are not directly received in the market, in the real market. It is coming directly in the stock market. See, whenever you are investing in stock market, you won't purchase 50% of the shares that are listed online. So generally in stock market, whatever investments are coming from foreign countries fall part in foreign portfolio investment. But if the investment is done in, let's suppose, assets directly to finance your stock, to finance your advertisement, to finance your growth and expansion, all such investments will be called as foreign direct investment. Now when we are talking about FDI, friends, we have three types of FDIs. What are these three types of FDIs? Let us have a look at it. Number one we have is horizontal FDI. Second one is called as vertical FDI. Third one is called as conglomerate FDI. Now horizontal FDI means, let's suppose there is one company in United States. They are producing cars. They come in India and they invest in a company in India which is also producing car. That means the line of business of the investor as well as the recipient is the same. So such kind of investment will be called as horizontal FDI. However, if let's suppose the investment is not done in the same type of business but some related type of business. So for example, a retailer like Walmart is investing in India in an e-commerce business of Flipkart. So it is not same business. Yes, I agree, it is a related business, but it is not the same business because Walmart is into retail and Flipkart is into e-commerce. So when retail business is investing in e-commerce, it will be called as vertical FDI, that is related. Conglomerate means completely unrelated business. So, let's suppose a food company is investing in India in a tire manufacturing business. So, it is not at all related to each other. Such kind of FDI will be called as conglomerate FDI. So, there are three cases in FDI, friends. Which are they? Horizontal FDI, vertical FDI and conglomerate FDI. Now, it's a very important task in front of us. We need to understand, distinguish between FDI and FPI. But let's take it as a case study, a question answer round. I'll be asking you question. You have to respond the answers. Depending upon your answers, we are going to frame the points here that you are seeing. We are going to discuss few points here in FDI as well as in FPI, but that points will be dependent upon your answer. So be with me, friends, and go on answering one by one the difference between FDI and FPI. Now the first question that I have here for you, can you tell me which type of investment results into creation of physical assets? Yes, it's FDI. See, when FDI investment comes in our country, obviously it will be used to generate more and more physical assets. Whereas FPI investment will bring only financial assets into our country. So, FDI investment creates what? It creates physical assets. And FPI investment creates financial assets. Okay, I hope you are very clear in this. Now, can you tell me which type of investor will be invested for short run and which type of investor will be investing or having an interest in long run? Yes, FDI investor will have long run interest, whereas FPI investor will just be investing for short term or short tenure. So, short term interest. Okay. Now friends, can you tell me which one will be more speculative in nature? Is it FDI or it will be FPI? Yes, FPI is more speculative in nature and FDI is not speculative in nature. Now friends, can you tell me which one would include technological transfers and which will not? Yes, FDI, whenever foreign direct investment is arriving in our country, they will bring the technological advancement along with them. So, FDI investment will also get technology transfers available. Here, technology transfer is not available. Can you tell me which one will create a direct impact on labor as well as wages and which will not create an impact on labor and wages? Yes, FDI will create direct impact on what? On employment and wages, and here we have no direct impact on employment and wages. Now, can you tell me which type of investment has interest in management as well as control? Will FPI be invested or interested in that? No, because they are short-term investors. They are just invested because they want to earn profit. Once they get the profit, they will leave our country and go back, take the money. FDI are generally long-term investors. So, if they want to get the returns, they will patiently wait. and they will also participate in the management process. So FDI investment or investors are interested in management and control. FPI investors, no interest in management and control. So these are the important points, students, that you need to remember for FDI as well as FPI. If you remember this many points, make sure or you are done with FDI and FPI, I would say. You need not remember anything else, just the meaning of foreign direct investment and foreign portfolio investment and the difference between both of these. Now that completes our second part in this unit, FDI as well as FPI. Let's go ahead, friends. Alright, friends. So friends, in case of modes of FDI, what we are going to understand? Well, there are certain modes that we have. I have written down the modes for you. First one is opening a subsidiary or associate company in a foreign country. Next one is equity injection into an overseas company. Acquiring a controlling interest in existing foreign company. Mergers, acquisition, you must have heard about this. Joint venture, I am very sure you have heard about it. And last one, greenfield investment, that is new overseas affiliate. Okay. Now just by looking at the statements or the modes here, it is very difficult to gauge the type. So what we will do, we will understand with the help of examples here. Opening a subsidiary or associate company in a foreign country. So one company in some other country is already operating. They are going to some other country and starting with their own subsidiary company. So for example, let's suppose we have a company that is Unilever Limited, UL. They come to India, welcome, and it opens a company which is called as HUL, Hindustan Unilever Limited. So they are opening what? They are opening a subsidiary or an associate in a foreign country. This is our first mode. Next, equity injection to an overseas company. Now, equity injection into an overseas company means they are not opening a subsidiary. There is already a company which exists. They are just putting their investment in this country and the company. Let us talk with an example. A company called as SoftBank. It's an investment bank basically from Japan. Let's suppose they have invested in India in Oyo rooms or in Ola cabs. Now they are investing. There is an equity injection, the monetary injection which is done, equity injection into our companies, that is overseas company. That is second mode of FDI. Next one, acquiring a controlling interest in an existing foreign company. Okay. There is a foreign company which was performing its operation in India. The name of that company was Hutch. Now, one additional foreign company came. The name of that company is Vodafone. Vodafone came into India and acquired another foreign company, that is Hutch. So, acquiring a controlling interest in an existing foreign company, that can also be a mode of FDI. Point number 4, it is mergers and acquisition. Now here you don't even need the example, students. Whenever two companies come together and form their own company, it will be called as merger. A foreign company takes over completely an Indian company, it will be called as acquisition. Now let me help you with one example of merger. A company called as Suzuki from Japan came to India, did tie up with Maruti, and they became Maruti Suzuki. This is merger. However, if this merger was for temporary period, that means it was already defined, it is going to last for 1 year, 2 year, temporary, then that will be called as joint venture. Let's suppose a company called as Honda entered into India along with Hero. They tried to produce motorcycle by naming it as Hero Honda. But it was not forever, it was for a limited period of time, that's why we call it as joint venture. And the last one, friends, it is greenfield investment. They don't open their subsidiary company. The company is, let's suppose, company X in USA. Now the same company comes in India and becomes X. So the same company is opening its production base in India. They are not outsourcing. They are not merging with anyone else. They are not acquiring any other company. They are establishing their own firm, not even a subsidiary, own firm here. So such type of investment will be called as greenfield investment. So these are the 6 types, friends, which are nothing but modes of FDI. Okay, first one was opening a subsidiary or associate company in a foreign country, equity injection into an overseas company, acquiring a controlling interest in existing foreign company, mergers and acquisition, joint venture, and last one would be greenfield investment. I hope you are very clear in this part. Now let's go ahead to the next answer, that will be benefits of FDI. So that completes our FDI and FPI. Now the next topic that we are going to understand, as you can see here at the bottom of this page, reasons for FDI. Now look at this point. Reasons for FDI, friends. What are the reasons? Why do we invest in some other country of the world? Why foreign investors are coming here and investing in our country? There must be some reasons, isn't it? Before going ahead, I request you to pause the video here and think about what will be the reasons. Why would someone go abroad and invest? Why would foreign firms come in India and invest in our country? What motivates them? What encourages them? Please pause the video here, try to find out some points, and then you can look out the points which I am giving here. Okay, so the points that I have listed down here, there are 10 points in total. What are the reasons for FDI? Now students, why would we go for FDI? See, remember, the way you produce a particular product, you don't want to share that information with anyone else in the world. Generally, you could have outsourced, you could have given the franchisee, but you don't want to share your business model, you don't want to share your production knowledge. What will you do? You will go abroad, set up your factory and start with the production process. Yes or no? So, if you want to retain direct control of production knowledge, you will not outsource the work, you will not license your work, you will go abroad, invest and start your own company. So if you want to retain the production knowledge, FDI would increase. Similarly, foreign firms, they want to retain their production knowledge, they will set up their organization here and start with the production. What we do, we get investment like that. So that is FDI's first reason, retain direct control of production knowledge. I am marking something here, why you will understand it later. Next one, we will be achieving economies of scale. What do you mean by economies of scale? Economies of scale means our production will increase and our cost of production will decrease. See, if you produce only in one country and supply in the entire world, unnecessary your cost will go on increasing, as well as you won't be able to reach out to masses. Instead, what you can do, you can take the advantage of going to some other country of the world, producing there and supplying there itself. That will help you in reducing the level of cost and increasing the level of production at a cheaper price. That will be called as economies of scale. Now, when we enter in some other country, why? Do you want to compete only in the current market scenario or you are a visionary? So of course, whenever you are investing so much of money, it would be taken care of that you will be investing so that you can emerge as a brand, as a monopoly in the long run. So in order to avoid any kind of future competition, right now when the market is giving us the opportunity, we will enter. So if the market is giving us opportunity, in order to avoid the future competition, we will enter into the market. That's one of the reasons for investing in FDI. Now friends, next one, if you are located in one country, but if you want to supply to multiple countries of the world, you will have to incur a very heavy transport cost, and apart from that it will be very time consuming. So what you need to do, go in the country where you are interested in doing business, establish your production, start selling there. Imagine if Amazon would not open its e-commerce business in India, and if you want to if you want to order anything from Amazon, the process would be, you will be placing the order in United States of America, and then they will start dispatching. The cost will be high, the delivery will take time, it will be so tedious process. So rather, what can Amazon do? Amazon can enter into Indian market, start with the Amazon.in and start selling the products in our country itself. Hey, if they are coming here investing, don't you think it is FDI? So yes, FDI will be attracted if you want to save time as well as transport cost. That's our fourth point. Now, if we don't go for foreign investment, or foreign investors are not investing in our country, and if we are having so much of resources, like India is having too much of human resource, if we don't get proper investments or company, what will happen to this human resource? It will be unutilized. So if you attract more and more foreign investors in our country, the utilization of resources will be done in the most optimum manner. So in order to get optimum utilization of resources, FDI will be done. So that's our next point, students. Optimum utilization of resources. 5 points we have covered so far. By now you must have understood the logic why I am underlining each and every initial letter in every point. Yes, you got it right. See, we are trying to create a code here. The question here is reasons for FDI, and the answer will be reason FDI, where R stands for retain direct control of production knowledge. E stands for economies of scale. A stands for avoid future competition. S stands for saving in time and transport cost. And right now we have understood O, which stands for optimum utilization of resources. I hope, students, you are revising along with me. Next one, N stands for necessity to retain the control of trade patents. Now if you don't want to share your patents, what will you do? You will have no other option but to enter into that country, invest in that market and start trading. Next, if let's suppose we are having a stable political environment in the country, then we will attract more of FDI. But if there is lot of instability which is happening in politics, investors will not be interested in investing. So one of the major reasons why investors invest in our country or in any other country for that matter, it's the stability and the promises which are given by the politicians here, by the leaders here. If they are stable, that means the business can grow. So if the political environment is stable, predictable, we can attract more number of investors. That will be our point number 7. So far, friends, we have completed from reasons FDI, reasons. Now the last 3 points. F stands for free entry or ease of penetration. Whenever we invite the foreign investors, come in India, invest in India, if we are inviting them, if there is less rules and regulations, free entry, we do not charge them anything, we just want them to invest in our country. So they will be more than excited to come and invest in our country. So more of freedom, more will be the investment. So whenever there is free entry or the penetration is very easy, investors will be excited to invest in our country. That becomes one of the reasons of FDI. Next one is diversification of risk. See, friends, if you are investing in only one country, and if let's suppose the rules and regulations in that country change, it will affect your business brutally. But let's suppose if you stay invested in 20 different countries, even if one country is not doing well, still you need not worry. Why? Because there are 19 other countries which are working in your favor. So what has happened? The risk has been diversified in multiple countries of the world. So for risk diversification, you can go for FDI. Last point is internationalization of production. Now, if you want to produce a product, let's suppose in Germany, in France, in Sweden, in Switzerland, it will be very expensive. Why? Because the labor is quite expensive there. The land is quite expensive there. But due to the high population that we have in our country, or the same situation is in China, and the land availability in our country, it makes us favorable for international players to come and start their production in our country. So if they find cheaper labor, cheaper place to produce goods and services, they will be more than excited to come in our country and invest and start with the production, which we call it as internationalization of production. So friends, these are the 10 points that you need to remember very nicely. You can revise along with me. First point, R stands for retain control of production knowledge. Next one, E stands for economies of scale. A stands for avoid future competition. S stands for saving in time and transport cost. O is optimum utilization of resources. N, necessity to retain control of trade patents. S will be stable political environment. Stable political environment. Next part is nothing but FDI, where we have first F, free entry and ease of penetration. D will be diversification of risk, and finally friends, I stands for internationalization of production. I hope this mnemonic, that is short form, helps you in by hearting this answer. Very important answer, students. You can remember any 6 to 7 points of your choice. Now let's go ahead with the next part, that is modes of FDI.